Hello, everyone, and welcome to our Women in Sectional Title webinar. Today, we are zooming out of Cape Town, and I cannot believe the growth in Cape Town. It's not only growing, it's booming. We're looking at the bigger financial picture, taking that moment to look at the bigger financial picture today in the shared spaces that we live in. So I think it's really important to look at a bit of research about Cape Town because it is the fastest growing residential hub in Southern Africa. We have 97,000 new residential units that were built here between 2014 and 2025. Not only that, we've got 38% of residential investment has come into the Western Cape in the last couple of years. And the most interesting thing for me is from a sectional title point of view, we've got 40% of all new residential developments in Cape Town are sectional title based. So that's really incredible. If you look at the population in Cape Town at the moment, according to the World Statistics, I think it's the World Population Statistics Review, 5.1 million people in Cape Town. And in the last year, 83,900 people have moved into Cape Town in general, that is. They don't talk about the figures of people going back to, say, for example, Johannesburg, if there's been some migration. And I do know that there are figures to show that there are people going back due to the expense in Cape Town. It's really expensive to live here. But just sitting here, looking out the window, I'm seeing this big crane, probably about 8 cranes within 1 kilometer of each other on this seaboard here from, I'd say, Sea Point through to Camps Bay. So it is phenomenal. But connecting all these people, we have our 2 sponsors. We Connect You, a software company, proudly South African software company, specializing in software solutions for the property industry. They are committed to develop superior solutions, enabling take-on processes and provide dedicated training and support services. We can really vouch for We Connect You. They're fantastic. If your scheme or if the scheme that you manage is not with We Connect You, seriously think about getting connected. ASI BestSure connects all our sectional title schemes across the insurance spectrum with tailored risk management and insurance solutions. And their vision is to be the most significant financial services insurance company in South Africa. Thank you very much to our sponsors. We're really grateful for you. So with all this growth, not only in Cape Town, but obviously across our provinces, what does it mean for sectional title? Well, it means that more money is flowing through our sectional title schemes. And today, joining me to discuss financial matters, which are really important, is Amber Raadgever. I'd like to welcome Amber, if you'd like to come on and join us. Hello, Amber.
Good morning, Marina.
Lovely to have you with us. Thank you so much. You're a chartered accountant and a director at Wakefield's Property Management, and I know that this is a very busy time for you, so we're really appreciative that you've come on board.
Thank you.
Right. So, Amber, one of the things that we talk about all the time with trustees and owners in schemes, and actually it was just yesterday, we went out with a family member last night for dinner, and he was saying, gosh, in his complex, the levies have gone up. They were 2,000 Rand, they're now 4,600 Rand, and he doesn't know where all the money is going that they're paying. He can't see it in action. What do you think are, from your experience, are the sort of biggest misconceptions, particularly from owners and trustees, I suppose, when it comes to the finances of a scheme?
There are many, but one of the biggest ones is going to be they don't understand how the levies work. They need to change their mindset and understand that the finances for body corporates and complexes and other housing homeowners associations, it needs to be thought of as a long-term asset management system. There's a lot of moving parts. There's a lot of planning, a lot of cash flow forecasts. they can't just look at the levy account and think, oh, there's money in it, it's a positive balance, so we're okay. That's a very narrow mindset to adopt. They need to be thinking of it as a portfolio. They need to be thinking planning for the future, many years in advance, depending how big the body corporate is, where it's based. There's so many factors to take into account.
Definitely. And I remember a couple of years, well, I won't even say how many years ago, but I remember going to the banking council to
Mm.
discuss a couple of things regarding attachment of units and selling them in the days when I was dealing with the real levies. And I remember the head of the banking council was Stuart Grobler, and at that stage he said to me, people are not treating these assets um, with the gravitas that they deserve at the end of the
Yes.
day. They're not treating trustees and owners don't treat their building as a business. It's seen as this residential collective. And we've said it's not really a residential collective anymore. This is like sort of microeconomy. And at the
Yep.
end of the day, they need to treat it like that. And those very people that are talking about, complaining and they're not seeing anything. They're the people who don't attend the AGMs, and they're often the people who, don't ask to see financials and don't ask to get involved, right?
Or they don't understand the financials and they do have them, but they need to ask them questions. The AGM is your platform to do so. If you're not understanding something, ask the questions, and the
Mm.
portfolio manager then can explain to you. Yeah, they
Yeah.
don't see they see that I've bought a house and I'm living there. They don't understand they've actually invested in a community. They've invested in an asset, and they need to keep that asset value. If they're not investing in their community and in the body corporate to stay looking the way it is, keep the condition up, you're not planning to actually have any growth in the value of your asset. So they need
Mm.
to keep that in mind as well.
For sure, for sure. And
Mm.
if you look at the sort of core basic financial components that trustees and owners have to have a look at, what are we actually talking about? What should they have in place, just from a basic point of view?
From a basic point of view, yeah, there's a few basic ones that can be looked at. So we've got our obviously administrative fund, and we've got to have a reserve fund. Both of those are required in terms of the Act, and a lot of people don't place enough importance on that reserve fund. It's sort of very much considered this other thing that's over there, but we're focusing more on what the levies are today and what we need to pay for today. There's not much of a future mindset. We're planning for today. Very this is Africa kind of mentality. We just have to
Mm.
survive the day, and get through that. The future we'll plan for tomorrow, but right now we need to get through today, and so the administrative fund is what main people focus on. They just want to make sure we've got enough to cover the main things every month. Maintenance, your repairs, your insurance, your eThekwini bill, your management fee. If you have a managing agent, you should have a managing agent. So just month to month, they're just trying to get through that month. Did we raise enough levies to get through the month? And they haven't even started thinking, what happens if there's an emergency? What if something big goes wrong? What happens in several years' time when the painting becomes due and you've got to upgrade this and you have to fix that, and they haven't planned for it, and then they get smacked with special levies and everyone's angry, so it's a problem. They need to have a much more forward mindset.
Yeah, for sure. I think so. I
Mm.
mean, from an administrative and reserve fund as well. I mean, obviously, we know that restrictions and directions can also be placed on the administrative and reserve fund. So those trustees actually have a really big say in terms of what monies are spent and what can be done from that. But before we go into the reserve fund in more detail, the levies, obviously your levies are the main issue here. And what drives the increases in levies, going up all the time?
Well, they should be going up all the time. The problem is when the annual levy increases skipped for whatever reason. You need to stick to those. You need to increase every year. Um, a lot of them don't realize all the factors that go into play when it comes to the levy increase. A lot of trustees are trying to play a popularity contest more. They're trying to get re-elected. Once they get elected, they think, oh, I'm in. Now I can change things. Now I can do what I need to do. And they find it's much harder to try and do what you need to do once you're in the hot seat. Getting there is one thing, and that's quite a challenge. But now you've got the popularity vote. But like with government, now you've got to deliver. And that's now quite a challenge, because now everyone's sending all their complaints through to you. Now you've promised to change all these things, improve all these things, and you suddenly realize there's a lot more to it than that. And there's a lot more restrictions than that. And you've got to, obey all the rules, and you've got to appease the owners, and you've got other trustees to work with. And there's a lot of moving parts, and it becomes quite a challenge. Most trustees also have a day job. They've got to go work, and they come home, they're tired, and now they've got to answer all these emails and approve all these payments and try and deliver on all the promises that they made when they got, elected into power, shall we say. And then they now have this levy increase that's come up, and they're talking about what they need to increase it by. They're looking at their budget, and hopefully that's done correctly, because you can't just inflate everything by inflation and hope for the best. You can't just pick a percentage and hope for the best and knock it across all line items. Every line item on your budget is going to be increasing by a different amount. There's contractual percentages that it increases by, perhaps for security. Some of these percentages are negotiable. Your insurance, you'll have to speak to your insurers about that. They change the amounts every year, and it depends on your loss ratio. You've got a lot of different things. And in eThekwini, we only found out, a couple of months into the year. They want to do all kinds of interesting increases on all types of things. And we argue as much as we can, but they do get their way most of the time. So each and every line item is going to have to be looked at individually, and you're going to have to look at the contracts and whatever government gazettes have come out, and try and determine what is the best estimation that you can come up with for that line item. And by the time you get to the bottom, you're worn out. But now at least you've got a budget that's as close to damn, and now you can look at that and amongst the other trustees, and now you must try and decide, what can we actually go back to the owners with at the AGM? Because have you done the budget properly before in the past? Maybe not. Maybe some items were grossly under budgeted for, and now you have to try and play catch up. That's not going to go down well. And you have to try and explain to everybody, why you decided on this percentage for this line item overall, why you decided on this percentage increase. Sometimes you're looking at huge increases, 20% and up. And that's either because it wasn't done properly in the past, or the correct budget was done, but when it got to AGM, the owners said, no, we're not paying that levy increase. And now you're stuck. So they all vote, and we end up going with a lower increase that's actually not enough to cover everything. So now you're stuck, and now they're going to try to push for catching up in prior years now. So you've got a huge increase, or possibly even you've had the increases you want, but now there's something big that comes up that needs to be done, something unforeseen this year, like I said, eThekwini comes along, and now you've got to have that much higher increase. If you can explain it and give them a heads up, a couple of months ahead of time, it sometimes is a bit easier. But if you just sort of surprise them all with it at the AGM, it usually doesn't go down well. Sometimes it just doesn't go down well regardless. But you try your best, but a little bit of a forewarned is forearmed a little bit in that aspect. But you do the best you can as a trustee in that sort of platform. When all the owners have brought a whole bucket of grievances to you at the AGM, they don't realize that's not the platform for all that, but they'll try anyway. So now you must try and sell this huge percentage increase to them, and everything else in their life has increased, and you've got to factor in the interest rate and their mortgage bonds and school fees and everything else, and now you want to propose a 30% increase in levies. Half of them don't even understand why they have to pay levies in the first place. Why do we need to pay levies? I've already bought my house. What is this? And we find ourselves having to explain that to owners all the time. It's just, what is a levy? Why do I have to pay this? They don't see the need to pay it. And you have to explain this is for maintaining the complex that you live in, and why is it so high? Exactly like you were saying earlier, they're arguing, why has it jumped from $2,000 to $4,000, and you now have to explain that. And they're never going to like whatever explanation you give. It's never going to be good enough, because at the end of the day, it's less money for them to spend on the things that they want to spend it on. It's just the way life goes. But yeah, that's your job as a trustee. It's thankless.
Yes, 100%. And you know what? I'm glad that you've mentioned that you have to go through every line item, because everything is different. And as you said, for example, your like security companies have got their own regulations through CIRA that add on a certain percentage. Because my experience is when on the ground, when speaking to owners, not so much trustees, but owners will say, yes, but my friend who lives down the road in that complex, they don't pay so much in levies, and they are getting better sales there because my levies are too high here. But I mean, there is a danger, isn't there? And in having low levies, some people will say with pride, my scheme, the levies are very low. I mean, isn't that a dangerous scheme to live in, I think?
Very dangerous. I mean, you're going to be smacked with special levies if anything goes wrong, because your levy increase is not enough. Your reserve fund is likely very low or non-existent, and your normal levies are, I mean, we've still got arrear levies that we have to contend with as well. So whatever you're hoping to raise, with whatever percentage you're going with at your AGM, that's banking on everybody paying their levies. So you've still got a huge amount of arrear levies. Hopefully not. Sometimes you get lucky with a body corporate where everyone pays, or there's very low arrears. And those are unfortunately few and further between these days. There's usually quite a lot of levies that are in arrears these days, and that's putting major cash flow restrictions on the body corporate needing to do what they need to do. And then such frustration from the other owners, which is completely justified. You're paying your levies on time and in full every month, and then there's these other people that don't. And now the whole body corporate is at risk because they're not paying their levies, because they don't understand, they don't have the money, whatever the story is that they have. But now everyone must struggle, and it's not fair to everybody, the collective. Like I said, you're investing in a community, and people need to realize that they're investing in a community. They're not buying a house, and the mindset has to change. They need to know that they're buying into a portfolio, even, and everybody must play their part. Everybody has to pay their levies so that the gardens can get mowed, that the building supervisor can get paid, and your fences are up, and plumbing is done, your painting is done, your house looks lovely, you driving through the gates, and you're proud to live there, and it needs to be like that, because the minute you start shorting on your levies, everything just starts tanking, and repairs and maintenance that's necessary gets pushed. People look at it, the paint looks fine, we don't really need to do it this year, let's reconsider next year, that way we don't have to increase our levies, and then next year comes along, the paint still looks fine, let's leave it another year, and you keep pushing and pushing and pushing, and meanwhile, you're living there, you're looking at it every day, so it's difficult to see that the paint quality has actually dropped, or maybe just on certain houses, which is, those owners can moan, but the rest are fine, and all of these things, you don't replace the things, everything has a useful life, and they don't want to replace the things when they're supposed to replace the things. And those small little maintenance jobs could actually be much lower in value, that you'd have to spend a much smaller cash outflow, but then they leave it and they leave it and they leave it, and then now it's a huge problem. Now it's a whole replacement of everything. Now it's a whole new roof, or the paint needs to be scrubbed and cracks filled, and the whole new primer put on, and it's a whole situation, and they don't see it like that. They think, oh, well, maybe I'll have sold my house by then, so it won't be my problem. Or, maybe we will talk about it then, and it can't be as bad as it's being made out to be. We're just being negative. It can't be that bad. Or we'll have money then, or maybe we'll have recovered that debt by then, and we'll have cash flow. There's always these thoughts that are
definitely.
going through their minds, trying to justify why we should
Yes.
keep the levies as low as possible. But the idea is get them as high as possible, not like as high as possible, reasonably possible.
Mm.
The max sort of percent that you need, because rather have too much money sitting in the bank with the body corporate than too little, because they'll all be very angry when they get asked to now pay a special levy of 1 or 2 thousand rand now because a whole roof needs to be replaced, or a bank's now fallen down because they didn't put the retaining wall like they wanted to or something. And they're all very quick to complain, and then all
Yes.
very angry to have to pay now. And it's just flows from there, So,
Yes.
and then you the next AGM and they're still moaning about the levies increase, but we paid a special levy last year. We paid 2,000 rand extra last year. Why do we need more money now? And you use the same argument, but we need to do this because we don't want another situation like the bank falling down and another special levy having to be, laid on you without, warning. But they don't understand. So, like I said, the whole mindset has to change. It's just not feasible to
Yeah.
continue people not understanding the implication. You're saving now, but you're paying out much more later. The cost of fixing something now might only be 20 grand, but you leave it later on, inflation continues, the contractor's price increase, petrol price increases, everything increases. And by the time you get there several years later, you're actually paying double, triple what you would have paid if you just done it then and there.
Yeah. So Amber, let's talk about a bit about the reserve fund, because for me the maintenance and repair is the really problematic area in all these complexes. And if there's no maintenance and repair, that's an issue. I wanted to find out. Okay, so if we're talking about the reserve fund, there are a lot of managing agents here who understand the reserve fund, but that formula, and let's talk a little bit about that, in terms of how that reserve fund is made up.
Well, I mean, so it should be 25%, but a lot of people end up going lower than that. They work on a 10% or something less than that. It's not right. You have to go. I wouldn't even say it, that the law says the 25%, but you should actually go and do a proper exercise. You need to get your 10-year maintenance plan, and you need to do it properly. And a lot of the trustees, they don't have the qualifications, the know-how to do it properly. And it's often their job to do it if you don't have a managing agent that's willing to do it or help you with it. And that's a major problem, because they're just taking the one that was done before, if they can find it, and they're just keeping that the way it is. They're looking at it and thinking, oh, I don't really understand this, but I think it's okay. Let's go with it. It's fun, and then you end up with problems. You obviously it's safe trying to estimate at 25%, but the problem is you probably need much more than that. You need to, it's another sort of budget thing where you go line item by line item. Really, you have to go through and you have to actually maybe get contractors in or specialists to try and guide you. How long will this last? As long as possible, obviously, reasonably possible. And when it is time for it to become due, when are we looking at? How long will it take to do the job? How much will the job cost? What's actually involved?
And if I can just stop you there, I just want to go back to the reserve fund. A couple of people are saying 25% of what? So let me just clarify. If the amount in the reserve fund, this is what the provisions are of the regulations. If the amount in the reserve fund is less than 25% of the total contribution to the administrative fund received by the body corporate at the end of the financial year, then you must put away 15% of the total budget for the admin fund for the coming year. Then it goes on to say, if between 25% to 100% of the total admin levy fund contribution, if it's between that, so you've got to just have a look at how much is in your reserve fund first, then the budgeted contribution to the reserve fund must be at least the budgeted maintenance and repair for the coming year. If it's more than 100%, so you look at your reserve fund and there's more than 100% of the total contribution to the admin fund at the end of the last financial year, then you don't have to put any money in. And I know from my experience with the community scheme ombud service that they never started inspecting reserve funds. I think that's definitely going to start changing. The
I
other
think
important thing for people to know is that that formula that is set out in the Sectional Title Schemes Management Act is it's what you call an immutable provision. So in other words, it can never be changed by any resolution. You can't say, oh, well, the 15%, once you've looked at the 25% is, it's too much or it's too little. That is actually what is set in stone. So you can't change that. The reserve fund also talks about emergencies, what you can pay out of your reserve fund. Do you
yes.
find that a lot of your complexes have to utilize the reserve fund for emergencies?
Yes, yes, a lot of them do. A lot of them do because for the same reasons we've discussed, they've gone with lower increases than they should have, and they're
Mm.
trying to cover just the admin levies. They're not trying to cover anything that goes into reserve. It's very much an afterthought. They're just trying to keep the levies as low as possible to make everybody happy and hopefully get voted in next year so they can keep going.
Yeah.
And that's a major problem, is putting you up for a huge risk, because now, like I said, you'd be snapped for special levies. If you're not budgeting correctly and you're not increasing correctly, there's nothing left to go into your reserve fund. So it's already low or it's non-existent, and now you have to try and raise a special levy to fill it up again, or you have to increase your levies by much more so that you can slowly start filling it up again. And hope that nothing big goes wrong, and all your items on your 10-year maintenance plan get pushed, because now you don't have the funds to do them, because you've just been constantly
Yes.
tapping your reserve fund. It's a huge problem.
Something interesting that I think people didn't know about is that the law also says that out of your reserve fund, say, for example, you have a very big legal case and you get a costs order that gets granted against the body corporate. If the body corporate doesn't have money in the admin fund, then you can actually take that money to satisfy a court order out of the reserve fund. I'm not sure if people knew that. Something I wanted to raise as well, and it's just a practical thing, and it's a bit of a story from my side, is that you can never make everybody happy. I mean, it's a balancing act.
Yeah, it is.
I think being a managing agent, or what I call now community asset manager, we've got one scheme in Mshlanga where some very clever people invested in one of the bank accounts, but it was one of these, money saver accounts, investment accounts, and they got the money up, I think, to about 11 million rand in there from a very small amount that people had actually put in. As long as it's a bank account, it's fine. You can't put it into anywhere else. But at the end of the day, now the owners are very interested in all this money, and they're deciding, can it be refunded? Can it be given back to everybody? Because now it's too much in the account. So you can never really make everybody happy. Obviously, you can't refund it because it's not a capital sort of gain.
Yeah.
And that's just interesting. Okay, so I want to talk about a little bit about
That's impressive.
financial statements. Financial statements. We spoke earlier about the budget. So the budget has to be approved and the levies have to be approved at the annual general meeting. Financial statements, just for everybody, do not have to be approved by everybody. The trustees approve the financial statements. They come to the AGM and they are simply considered at the AGM. Just talk us through some red flags that you guys have found from a finance point of view in terms of the financial statements and what people need to be looking for.
Well, there's several things they need to be focusing on. They need to obviously have a basic understanding, or as long as we can try and come with what the common questions are going to be ahead of time, then you can prepare for the questions that should be asked, maybe hopefully just guide them through. But they need to be looking at your rear levies. That's a big one for me. They need to understand how much it is in there. Obviously, you can't mention names of whoever's causing it, but you need to see how long the aging of it, how much it is, how much it's grown by from the comparative years, the previous year, If you've got the previous year's financials as well, you can even look at 3 years together. You need to look at the cash balances. Obviously, keeping in mind all of these things, it needs to be done 4 months after year end. So obviously, you're thinking now this several months have passed. So obviously, what you're looking at is from several months ago. It's not a live, this is what we've got in the bank situation. But hopefully, it hasn't changed too much, so you can still talk. It's also nice to bring a set of management accounts. I usually like to bring a set of management accounts to the meeting as well. So you've got something live today. So you've got your financials, and then several months have passed. Now you've got your live management accounts as well. Just helps to answer some questions which I find usually pop up about, or what is it today, So yeah, the arrear levies, you need to know what is the income that should have come in versus what actually came in, and how much is still owed to us.
Yes.
That's very important. That's hitting your cash flow directly. Obviously, what's in your bank balance. Obviously, look at what's your reserve fund. What did it start the year with? What were the amounts put in? Amounts taken out? Should they have been taken out like that? With the resolutions and whatever in play, they meet the criteria. What's your closing balance? Obviously, you're going to be looking at all of these things, as well as the increases in certain key line items on your income statement as well. Has your repairs and maintenance jumped hugely? What was the reason for that? Trustees will obviously be able to provide reasons and explain, this needed to happen, that needed to happen. You obviously need to be looking at your insurance, the items I mentioned before, basically what has caused this huge jump. Utilities, we all know the answer to that, but hopefully there's no massive water leaks or anything like that you're dealing with. Your managing agent fees, there's security that you need to look at. So yeah, there's certain line items on the income statement that you need to talk about, increases, and if it's outside of what you originally budgeted for. If it's what you budgeted for, then that answers that question. But it's only if it's very different. You need to sort of provide reasons for that. You need to look at what your bottom line figure is, basically. Do you have an operating surplus or a deficit? Did you come in at a loss, exactly, or did you come in at a profit? Mm-hmm. How are we doing as a business? Like you mentioned earlier, think of it like a business. How is the business done? How has the community performed for the year? That's important. A little surplus is okay. A little deficit is a problem. A large deficit, very big problem. And explore which line items contributed to that deficit, so that they can be focused on and drill down into, and then plans made forward to address those, so that we don't sit with we can try and rectify that as soon as possible. And that's why it's so important to get those financials done as soon after year end as possible, because the sooner you can identify these things, the sooner you can take action against them. It's nicer to go into the AGM as a trustee, having looked at the financials and found the problems already and taken steps towards addressing them and resolving them already, because then, it's not sort of, it's just discovering it now, and now we look like we don't know what we're doing. So you go in as a trustee saying, this is the problem, this is what we've identified, this is what we've done about it, and it's not a problem anymore, or it won't be a problem in a month or two's time, or we're waiting on feedback. So at least then the owners feel confident that they've voted in trustees that are handling the situation. They're not worried that there's a ship without an oar here, and you guys are keeping things on track, and you'll likely then probably get voted in again, because they want you guys to continue solving that problem and staying on top of things, and they've got the confidence in you to keep doing what you're doing. So quite a few of those things are very, very important to look at. So also accounts payable, creditors, how much money do you owe people? Usually SARS. It's always SARS. Are you registered for tax? First, very important one. A lot of them still aren't registered for tax. There's a lot of body corporates who aren't. So your SARS bill is a huge one. Do you owe contractors a lot of money? It's Queenie a lot of money. So you need to see, who do you owe piles of money to, and how are you going to get those funds to settle those debts? Because by the time you're looking at the financials, are they paid up? That's why I said, bring the management accounts, because then you can easily say, these are no longer creditors, they've been settled. Or are they still creditors and the amount is more? Are there interest on those accounts that's now accumulating as well? You've got to consider all of these things and have answers, because the last thing you want to do is be in an AGM and you're floundering. They've asked you a question, or some bright spark will comb through the financials and find one line item that they want to query on, and you haven't seen that one and you don't have a response prepared. And then now you're sitting there scrambling, trying to throw papers around, trying to figure out what the answer to it is. And that just loses your power, loses your confidence. And then they all start looking around like, oh gosh, who's this person we voted in? We need to get someone else in here that knows what they're doing. So it's important to come prepared to those kinds of meetings with the answers to everything, and a plan, a way forward to everything.
We also find, Amber, that the meetings, the auditors create sometimes a little bit of a drama, because audited financials are not ready on time, and we have that. I mean, since the 2016 Act, if there's a new scheme after that, I mean, you've got your new October financials date, unless you change that by special resolution. But for complexes generally, when generally is the financial year end, do you find, for most of your schemes?
Our main one is February still. It's the main. That's why this time period is incredibly stressful for all of us. February is our main big one. We do have a lot of June year ends as well, and December year ends as well. Those are our main big three. Yeah, but February is the biggest still by far, in line with the SARS tax.
And there's a question I've got for you about auditing, because in the old Act, if there were less than 10 units, you didn't need to have an auditor. You could have an accounting officer. Now every building has to be audited. What are your thoughts about that? Do you think it should change? The law should change again, back to the old way?
Look, there's always risks when you've got a gap like that. At the end of the day, audits are there because they're providing assurance to the shareholders when there's a gap between management and ownership. You see, so the shareholders need to know that the business is being run correctly, and that is what the audit is there to provide, reasonable assurance that the financials are fairly presented. They don't check everything. They check as much as they can with their samples and their controls to make sure things are going, as far as they can tell, correctly. So and that's the problem as well. Even if you do have a body corporate that's under 10, and it's the money side of things, the value is so small compared to one, say, that's 300 units or something like that, but it's the qualitative side of things you've got to factor in there. You've got to think, the same things can go wrong, the same controls can go wrong, things can still not be managed correctly, so you're representing the owners there. So there might be 8 owners, but there's still that gap in the management. You've got the 8 owners and you've got 2 trustees. Are the trustees doing what they're supposed to do in terms of the Act? And that audit is providing that assurance, because they are testing a lot more and making sure a lot more boxes are ticked than they would if they were doing an accounting officer compilation. That's literally just taking things and comparing it to the statements. So if you take your eThekwini bill and does it match, and that we go fine. And they're not actually testing the controls and not doing all those extra compliance checks. There's so much more that goes into an audit than into accounting officer. So there's no assurance provided with accounting officer. There's a lot more assurance provided with an audit, and that's why it's more necessary, like I said, even though it's a smaller number of owners.
Yes, I agree. And I see a couple of people have asked the question about, what happens with auditors dragging their heels for 6 or 7 months, and, what happens. There's nothing punitive in terms of not having your AGM. I mean, the only thing that can really happen is you can go to the community scheme ombud service if the trustees are not holding the AGM, just to answer the question, to say that they have to, that they're compelled to. But there's nothing punitive. So I know that for a fact that is a very big sticking point with a lot of owners, where they go to a meeting and the financials, it's always these excuses about financials. Just as a matter of interest also for our listeners here today, is that we've got body corporate has to keep financial records for 6 years. For 6 years. Very important. important. We've had a case a while ago where they got rid of them before that, and that is a problem. So, Edna, I just wanted to read your thing, your message. It says, often the auditors get incorrectly blamed. Usually the fault lies with the managing agent who doesn't get the information to the auditor timely or at all.
True.
Again, I'm not going to get into that war. That may be true, absolutely. Just Nico here says, recently learned that a magistrate's court may attach the rentals paid to an owner when such an owner refuses to pay his or her levies. What is the general opinion for this? Well, I can tell you, Nico, we, as a the law firm I work with deals with the real levies, and you have to have the lease agreement. It's quite a process to go through the court. You can also go through the ombud to get rentals attached. You can get an award in terms of Section 39. These things all take time. I think somebody also asked something about arrear levies going through the courts. What's the process? How long does it take? It's not a magic wand that anybody's waving. And at this stage, from an economic point of view, I don't know if you find this, Amber, with the buildings and your group managers, it's very tough. You can't get money out of a stone very often. So you have to proceed until you can actually attach that unit. But I mean, it can take 9 months, 10 months, a year to get a unit actually attached. But that is a fiduciary duty that the trustees have to go that route and to certainly, to cover yourself. The other thing I wanted to raise, because I can see we're sort of starting to run out of time, is when the body corporate does attend that hold the annual general meeting, and the levies are approved directly after that, all trustees must do themselves a favor. They have to have a meeting, and there's got to be a resolution about the agreement at that AGM and the approval of that levy, because otherwise some sneaky person can actually get out of paying their levies completely because there hasn't been a resolution. Just be careful of that. That's the Peaks Body Corporate case versus Princeton. Very, very important. Okay, so I think that we've gone through a lot. Just one more thing about the auditor question. You can't have the same auditor who's dealt with anything to do with the body finances. Is that correct? To be independent, Amber.
You've got to have an independent auditor. Yeah, there should be no conflict of interest. Definitely not if no, they need to be independent always.
Sure. Okay. So from our point of view, if you could give the trustees one piece of, and I'm asking this, in your capacity as a chartered accountant, not only dealing with sectional title matters, what would it be?
So many, but basically don't fall into the pressure of what the owners are expecting from you. They all want levies to be free. They all want it to be zero, but it can't be zero. You have to stick to your guns and not think of it as a popularity contest and not try to appease everybody. You'll never please everybody. You have to do your budget properly and your 10-year maintenance plan properly, and you need to go to them with a little bit of forewarning, and you need to go to them with what the increase actually needs to be. And look, you might not get voted in again next year, but you need to do your job properly as a trustee. It's a big responsibility, and like I said, it's your community, it's your house, your asset, your home. You have to live with the consequences of not doing it, not doing what you're supposed to, and having the increases that you're supposed to do. And you've just got to go for it, and you'll get a lot of resistance and people will be angry, but you've got to go for the increase that is the right one for your body corporate, so that you have enough money to deal with everything that you need to deal with, because they'll be more angry when you don't. So you need to actually stick to your guns and go there, sometimes ready to do battle, but it's a good battle. It's for everybody. And you'll actually find quite a few probably agree with you at the end of the day, because there'll always be those few that are very angry, but you'll have the bulk. If you can explain yourself and you can show your workings and you can justify the increase that you're asking for, they'll have to agree with you, and they'll realize, they'll see the results afterwards. There'll be positive results. They'll see their assets increasing in value, and they'll see community is a good place to live, and they'll realize it was worth it.
Absolutely. There are two things I'd like to leave everybody with, and I think it would be so much easier, wouldn't it, if your managing agents could just work unsort of hindered by
Oh,
trustees who have governance paralysis
yes.
because they're too scared of their legal fiduciary obligations,
Yeah.
right? So that's the message
Yeah.
that we're sending out in our community, in our sectional title and community schemes industry. If
Mm.
you're a managing agent out there, portfolio manager, really up your skills, or if they are already upped, I'm sure there are many of you who are already acting as executive managing agents. But we have to
Mm.
get to the point where trustees are not removed, but rather kind of sidelined to perform more strategic oversight. We
Yeah.
need managing agents to take control and to professionalize the industry going forward. So if there's one thing that you take out of this webinar as well is financial competence, financial intelligence in a scheme is critical.
Yeah.
So those are the skills to really be sharpening if you're going to be sharpening the saw, as they say. Last thing, just about interesting something about short-term letting, I think you should know about. We're looking at, there's going to be public participation soon for the bylaws around short-term letting, to include a provision in the bylaws to say that anybody who is short-term letting is running a commercial endeavor and will pay rates and taxes on commercial rates, no longer residential rates. So they're putting that out for public participation pretty quickly, and I think it's a move that we all wanted to see. That brings us to the end of our webinar today. Next month, we're going back to our consolidated practice directives and looking at a summarized version of the directives and looking at a few things that we've missed out on in our previous two. So please do join us. There will also be, we're looking forward to our June webinar as well, where I'll be interviewing Helen Ziller about Johannesburg buildings and where we are with them and how we're going to really get involved in improving Johannesburg. So yeah, until then, thank you so
Exciting.
much. We appreciate you joining. Thank you, Amber, for your insights. Greatly
Thanks.
appreciate you. Bye-bye, everybody.
Sure. Bye.